All right, everyone, here we are with another video with Invest for Tomorrow. And to all the first-time viewers and investors, welcome to the channel. And to all the subscribers, welcome back. All I ask for in return is for you to smash that like button to let me know you watched this video, and it helps out the channel. And to stay tuned towards the end of this video, because I have another ticker symbol you won't want to miss after everything that we cover here about Senseonics. So let's jump right into it. So Senseonics is being an innovative being right now. When it comes to that, as a company, I mean, their organization is doing something never seen before, and it's going to change many lives if this monitor that they say really does what it does, and if they can go ahead and extend it through the FDA approved. So Senseonics is the creator of the first and only long-term implantable glucose monitor that's continuous. Now, I look at this and I could think about the fact that it's almost like working alongside with the person's pancreas, or it's almost as close to an artificial pancreas. Now, I'm not saying that a person's body can live without a pancreas because of this, or this could change the game, but it would have to be like switched right away. I'm not sure how it'd work, but very interesting to see this change up the game. I'm not sure how far into science this could help, but right now, to the point of being a glucose monitor and continuous and overextending the life compared to what's out in the market, it's already making a big difference. And I can only imagine outside the box how much further out this can change the game in this sector and in the health field, changing lives. So let's see here these other charts, and we're going to talk about some of the companies that have been around way before Senseonics has become a big deal. So here we have Medtronic at 118. It's the largest in the sector at $160 billion of market cap. Okay, I want you guys to remember these numbers. Now, if we go all the way back to the 90s, this stock was way down here at $1 and some change, ran up to 6, pulled right back down to 3 in the 90s, and it took time until it took off to the $13, $15 range, and it just kept growing kind of sideways, fell down back to the 20s, and it's just been running up since. Medtronic have changed many lives. Now, there's something that Senseonics has on top of these companies, so I want you guys to remember this. Medtronic can last 3 to 7 days. That's the longest in the market right now that can last, and then you have to change the sensor or the item that's attached to the person's body that can go ahead and, I guess, sense the amount of glucose, and then it sends it out automatically if needed. So that's one of them. The other one is the parent company of Omnipod. These two are the main competitors in the sector and in this world of health, and the parent company is Insulet Corporation. Now, they have a larger price per share, but a lot smaller market cap. So this could probably take off even more than Medtronic has seen, and it has a lot of room, as we could see, for this market cap to grow. So Insulet Corporation is going for $261 per share, and it's at a $17 billion market cap. So if we go back to Insulet Corporation, you could see that it debuted here at $14, or that's as far back as I can go in 07, and it fell down to $2 and some change, and it took off since. Okay, changing many lives as well, and it can't last as long as Medtronic, but it lasts 3 days. Now we're going to talk about Senseonics. So let's go ahead and look at Senseonics, and I'm going to show it with you guys why Senseonics is a big deal. Senseonics is worth $1 billion. It was at a low here of 40 cents. And the last time I could go as far to 2016, it was at the $2 range, and we're sitting at $3. Okay, if you remember the graphs of those two other companies, they did have a moment where they dipped. People lost hope in them, and then they started to recover. Now, this ran a little too fast, like a penny stock. I don't know if it can just take off from here or consolidate before the next catalyst instead of pulling back downwards. We're going to have to see. But in the long run, I mean, based off those two companies, there's a lot of potential, and Senseonics has something that these two don't. So let's talk about it. So Senseonics has the 180-day ever since glucose monitor delayed at the FDA by COVID-19 pandemic. So it's being delayed. It might be checked by the FDA later in the year at this time or in the next coming months. And if it's still delayed, I mean, the opportunity to continue to look at Senseonics and watch it closely is there, because once this gets approved, this is going to be a game changer. So let's see what Senseonics has right now. So Senseonics ever since continuous glucose monitoring system, a smartphone connected device, was the first approved in June 2018. That's inserted completely under the skin, aims to double its lifespan from 90 days to 6 months. So it's already the largest time frame, right, when it comes to Senseonics. The other two are 3 days, and Medtronic's is the one with the most time, which is the most known in the market, 3 days to 7 days. This one can go 90 days, and it's looking to extend itself to 180 days. And then the next time you know it, it's going to be 1 year. And then after 1 year, it could be 2 years, 3 years, 5 years. And this is going to change lives tremendously when it comes to diabetes. Okay? This gets implanted under the skin, so you won't see it. You won't see it. It'll probably be covered up with something, or you could probably see like a small bump or something on the skin, but it'll be underneath the skin, and it's not like it's some device that's attached on the outside, and it's going to be monitoring glucose, and it can last for 90 days and going into 180 days. This ever since glucose monitor is going to be a big deal. Now, one of the things that's going to save most of the diabetes or diabetic patients from is continuous pinching, right? Every time they pinch, they got to put the drop of blood. You know, that's what it's been all this time. This is going to change the world of diabetes with the ever since monitor, glucose monitor. Big, big deal. I don't know how you guys feel about it. I don't know how familiar you are with this, if you have a family member that has this or you know anyone with this, and how hectic it is and how important it is to be able to monitor everything strategically or with some type of clarity. And this glucose monitor goes beyond what the others can offer, and it goes up to 90 days, and it's trying to seek 180 days, and then after 180 days it's going to try to seek 1 year. That's going to change lives. So when we see here the institutional ownership, you can see that there's some big players here with some large amounts, and some have been adding on, as you can see here, 2 million shares, almost 2 million as well, here in February. All the green slots are new positions, and you could see them all being added up. And then you have some that are holding through at the 60-cent range and so forth. Now, when you look up Vanguard, they own a pretty big position, and that is 7 million. And when we look up BlackRock, they own a pretty large position themselves at 2.8 million. This stock, just based off of everything that we've seen already, and I definitely recommend checking out the website. I would encourage you to learn more about it and learn more about their ever since monitor, glucose monitor, and how they're trying to work on this. But even if it doesn't get FDA approval, 90 days is a lot more than everything else right now in the market. Now, when you look at the others compared to Senseonics, even if this was to reach the 17 billion that we saw Podbe, right, Omnipod reach, then this company could probably 10x, or like you see 17x, and Senseonics is going to have room, right, to 10x to 17x. And I would say easier to say 5x before even mentioning the 10x, because 10x is pretty bold, but this could probably 5x. And if it 10x, we'll definitely see it in the 30s or close to that. If it 5x, it will be close between $10 to $15. So we're going to have to see how things play out moving forward. It's already 10x from the lows of the penny stock range when it was in the cents. at 30 cents, 40 cents. Now we need to see if it's fully capable of making it 10x from here on out. And if the growth could be rapid, this could pass 17 billion. This could take a market share from Medtronics, from Omnipod. But if you saw those charts, specifically Medtronics, it took years for those results to be seen, for Medtronics to even reach that share price and that market cap. I hope you guys learned something new, as always. And if you found this video helpful and informative, please do so and subscribe. Don't forget to click on the bell to turn on all notifications and not miss a single video that I post. Share this with your friends and community. And don't forget to hit the like button to let me know you watch this video. Stay tuned till the end because we do have a ticker symbol you won't want to miss. Stay tuned. Welcome back, everyone, to another video here with Invest for Tomorrow. And all I ask for in return is for you to smash that like button to let me know you watched this video and you found this helpful and informative, and for you to share this with a friend or a family member so they are aware. And if you're a first-time viewer, just stay on tight and you find value in this, don't forget to leave without clicking the subscribe button. So here we are, Matterport.com. I highly recommend checking out the website, and there's so much cool information about this company that it's just immense, and it's just unbelievable how far into technology we're going. And you could see that it can capture any space into a 3D diagram. Now, all it takes for this to go to the next level, which I wouldn't be surprised coming soon, is actually putting on virtual goggles, right? Virtual reality goggles, and you can actually tour and walk inside there without even just looking at a screen. You'll actually feel that you're there without being there. So imagine that being a sales pitch from a realtor, and it saves so much time of driving to all these different places. You just go to a local central spot, you put on the goggles, and you're there. And the virtual reality is becoming a reality. That's just immense, crazy stuff to think. So GHBI, I've been talking about it as it was falling, and I actually caught it back at $17 when it was falling. This was the second time I reiterated it, and that was this weekend on March 6th. And I said the closer to 10, the more interesting. It had hit a low of 1132, but the market ran up. I mean, I talked about it here that I could see it possibly falling a little bit more unless the market runs wild with stimulus being passed, and we may have seen its bottom close to 1132 for now. We shall see. So since then, it's been running. It's sitting at $16.99, and I'm here to tell you guys why this is one you don't want to pass up on, and the potential is immense. I could see this 50x at the most, and the lowest 20x, okay? And we're going to talk about that in just a moment. So this is the first article how everyone found out about it, and it's called "This SPAC Could Be the Best Stock of the Decade." I'm not going to go into much detail about it. It just shows us a little bit about the company and what type of sector it's in, how it's an untouched sector, and it shows us the 3D modeling. Definitely look this up to read more about it, and definitely check out the website. And now this is where I'm definitely going to summarize everything and talk about what it says that has a little bit more information, quicker and to the point than just reading that whole article and going through the whole website. So I really like this one. It says 3 unstoppable growth stocks to buy right now. That was a pretty bullish statement back in February 26, but prices are a lot better right now than February 26, or kind of close to them. So this is why this is a stock you don't want to pass up on. So the first question is really interesting. Would you like to invest in a company in a massive, underpenetrated market with a clear leader and relatively low valuation? Put those three things together, and you have the kind of stock that should almost certainly deliver tremendous gains. I think GHBI checks off these boxes. That's a bold statement, and we're going to have to see after the merger if institutional ownership goes up tremendously, and that'll be a big sign, but very bold to say that. And that's the type of questions you would ask yourself, or any investor would ask themselves, and hopefully come across in Amazon when it was under $100, come across Apple when it was under $10, $20, come across Google when it was just a few cents. You know, those are the questions, and that's how you find these tremendous gainers. Like, this is said to be the stock of the decade. Now, it says here what they're about and how they create 3D models with any physical space. And the total addressable market for this data technology is $240 billion, okay? The company space under management is 100 times larger than in the entire rest of the market. Okay, its SPAC is public offering is expected to value the company at around 2.3 billion. Okay, so when you look at this, this is 100 times, right? 100x. Now, I don't think they're going to get all of the addressable market, but if the market even grows and expands, then this could possibly 100x or get pretty close to that. But the reason why I say this could possibly 50x is because they're the largest ones in this sector, and it's untouched by very few and underpenetrated. And if they go ahead and take up the market share as fast as they can, I could see them taking probably 50% of this. And if you go ahead and do that, you know, that's 50x of where the stock's valuation is right now, which could also be almost $100 billion at some point. So 50x is big moves, okay? That's still 5,000% up over time. So Matterport projects its revenue will increase by compound annual growth rate of 59%. Okay, where do you find those returns? Not every day. So when I look at that, I mean, that's explosive growth, 59%. And it's going to be soaring close to 750 million by 2025. And basically they go to say they don't see anyone coming in the horizon to beat or try to compete anywhere near the company's potential. Once the merger with Matterport is finalized, this will be practically unstoppable. I mean, I know this could sound like very bullish or a lot of hype, but this company's potential and the way it's innovating and changing the game, I could see this 50x and 5,000% go up over time. And it could possibly even grow bigger than that because of the fact that this is right now 240 billion of a market space, and it could grow even more. And the more that grows and the more the company grows over time, the more it's going to feed off of that market space and market cap it's going to receive. So big space here, big opportunity. And like I said, it would be very surprising to see this go to the next step where a realtor could say, hey, do you want to go there right now? And they're like, well, how far is it? It's 2 hours away. Do you want to go there right now without even having to drive? Just put these on. And all of a sudden, it's a sales pitch. People are going to be excited. It's just going to change the realtor world and the whole entire real estate perspective. And not only that, but the way we could do things architecturally, and also just so much could be expanded off of this. It's going to be wild. I can't wait to see where this goes. I'm excited about it. Big potential here. I look forward to seeing your guys' thoughts down below. Comment down below what you think about this space and what you think about where this is going, and especially if you're a realtor or you own your own brokerage, how you feel about this company. As always, guys, thank you guys so much for watching, and let's make some money.